On today's Hashi, I'm discussing the cabinet meeting that had a whole bunch of comments on housing, ADP's employment report, and mortgage applications here for the past week. Today is BAM Pro Bowl Day, Wednesday, February 4, 2026. I'm Byron Lazine, and the hot sheet starts now. Live from Connecticut. Pleasure to be with you wherever you may be tuning in from, however you may be listening, whether it's here on live on YouTube or if you're listening to the replay, Apple, Spotify, whatever it may be. It's a pleasure to be with you. Spending some portion of your day with me is an absolute honor and pleasure. We got BAM Pro Bowl today. Less than 3 hours from right now, BAM Pro Bowl is kicking off. This is the first mega virtual event of the year for BAM. You can still get in. It's free. It's bamprobowl.com. I was chatting with Jared James last night over text a little bit on some of the things that we're going to be discussing. I've got myself, Jared James, and James Dwiggins doing a fireside chat to end the BAM Pro Bowl. Okay. And Jared and I are just talking about, some of the things that we're going to be going over today. And this is going to be a fascinating conversation with the two of these guys. If you're already listening to Jared James and James Dwiggins, then you know what I'm talking about. We're going to dig into elevating agent status here this year, what exactly you need to do to elevate your status. So that's a conversation I'm really excited about. Of course, Neil Dingra is going to break down new rules for standing out. And then Not Your Daddy's Lender, Theone, creating content through storytelling. Just a killer lineup, play-by-play. Of course, myself and Eric Simon, the broke agent. And we have Kyle doing a national anthem. This BAM Pro Bowl 3, if you've attended either of the first two, this is can't miss stuff. Go to bamprobowl.com. Totally free, kicking off here in less than 3 hours, and I'm ready to roll with you. Okay. Speaking of rolling, we've got the roll call from a cabinet meeting with the administration. Okay, so Donald Trump's cabinet meeting here recently, which caught some headlines as it relates to housing. Remember, this administration, I think, has mentioned more housing more times than we've heard it in, a number of years. So, why are they latching on so much to housing? Well, it's a midterm election year, and they want to be branded as the saviors to the housing market. When people think about affordability and affordability struggles across America today, they often think about, okay, well, like, what would things being more affordable enable me to do? Enable me to accomplish life goals? Check. A life goal could be buying a home. Check. Gen Z still says part of the American dream at extremely high levels is owning a home. Check. So Trump and the administration get that. If nothing else, you got to understand Trump's a master marketer, brander, negotiator, all those. It's why he's been so successful throughout his life, why he's been in the position, obviously, that he is today to be running the free world. And he understands the time of year that it is. We're months away from a midterm election. He wants to be branded and doing the marketing of somebody who's going to solve for affordability. In America, homes, real estate, that asset class, home ownership, that dream, all encompasses the feeling of things being affordable, being achievable. Okay, so some takeaways here, and inside of this cabinet meeting, the goal remains to lower rates. We've talked a lot about the Fed chair situation, Warsh coming in potentially if approved by Congress, and how that is going to maybe impact this, steadfast stance from the administration. We want lower rates. He's been previously hawkish. He has said he would be a supporter right now of lowering rates. One of the takeaways here is that's a key part of getting there. Certainly not the only component. Maybe realistically, we get 2 cuts from the Fed this year. That would put us in a neutral position. Warsh doesn't seem like the kind of guy so far that's going to go really beyond neutral, stimulus position. I would obviously caution against extreme stimulus coming from the Fed. Doesn't seem like a guy based on his 20-year history that's going to go that direction. So how much can the Fed actually help? We know our friend over at HW, Logan Motoshami, friend of the pod, friend of BAM, has said that it's about a 60-70% factor of what the Fed does in terms of the 30-year fixed mortgage rate. A lot of it gets priced in ahead of time. The markets believe there's a better than 50% chance that June would be that first cut. So how much of that is even priced in? We've been at the low 6s, way better than last year versus the low 7s. I think the check mark in front of buyers right now is like, hey, we're a full percentage point lower. We have more inventory. Check. You have more negotiating power in February than you will in May. Check. And you also have pendings increasing. What's that going to look like the end of the spring? More leverage now. Be an early mover. Check. Okay. More takeaways from the cabinet meeting. This is interesting. The administration wants affordability, and yet has now in recent weeks come out and been saying, and this was something even said at Davos. Well, we don't want home prices to crash to get there. And when you start to, talk to people that are really hung up on how things are not affordable in their community, it's like, hey, to make things more affordable, how much of your home's equity would you redistribute into the market? That's basically what you're talking about. Redistribution of your equity into the market. Well, what do you mean? Well, if home prices crash 30%, everything would be more affordable. Oh, I don't want that to happen to me. Okay. I'm not looking for that scenario. Now, the administration understands that a lot of people's wealth is tied up, or perceived wealth or equity. And one of the things that they're saying is keeping home prices high while, so basically protecting homeowners' wealth is a line that they don't want to cross, so it's creating affordability, making it easier to buy a home while at the same time keeping home prices high. Listen, guys, it's like kind of, there's nothing more classic than a peanut butter and jelly sandwich. There's nothing more tried and true than what's going to get us out of this situation. We need wages to grow. We need to stop printing money. Inflation needs to be down. Wages need to grow. You need to have rates reasonably down, at least in a neutral position. We're below the 50-year average on 30-year rates. And inventory needs to continue to get back to at least pre-pandemic or above levels for this thing to start to even out over time. We've just printed way too much money in a short period of time, and it skewed all the numbers. But to get to a place where homes are going to drop 30-40% could create a bigger, if that's across the board, it has, and obviously some locations, could create a bigger issue than I think most people would be willing to face. Okay. Buying should get easier is a key takeaway. And so let's go to some of these clips here. We're looking at this from a housing perspective. You can hate the administration for your reasons. You can love them for your reasons. I really don't care. We're looking at this for, what is the focus here on housing? How can that impact some policy moving forward, which for us, how can we get a better feel of what's going to come throughout 2026? Are there any good ideas we could bring locally that could work in our own local community? This is about just under an hour into this. These cabinet meetings are all recorded. I mean, we have the roll call of this thing. The thing is long. We've picked out just what we need to know about housing, so we're not focused on any other crap. Let's go to President Trump's first comments inside of this cabinet meeting as it relates to housing.
but we got to get them lower. And I'm a big factor. To me, the biggest factor is interest rates for housing. Only in that, you have a lot of people that have become wealthy in the last year because their house value has gone up. And, when you get the housing, when you make it too easy and too cheap to buy houses, those values come down. I don't want those values to come down. We have millions of people that own houses, and for the first time in their life, they're wealthy because their house is worth $500,000 or $600,000 or more or less, but more money than it's ever been worth before. I don't want to do anything to knock that down. And so I want to be very careful with this. You make housing, I can turn on housing immediately, but you make it too easy and you're going to knock the value down of people that own houses. I want to, for those people, those millions of people that own houses, we're going to drive those values up. But we're also going to try making it easier for people to buy. The best thing that can happen for both groups of people is lower interest rates. And those interest rates are coming down. And with a proper, intelligent person at the Fed, that person will be able to work with us to get interest rates down.
So pretty interesting because there's been so many housing comments, but making it pretty clear there that a line that he does not want to cross is one that lowers current homeowners' value. That's interesting. Okay. Because I think to get to, the fastest path to affordability would be lower rates. Okay. Because you're talking about a monthly payment. Most people are financing. The long-term plan to affordability is a real path to substantial increases in inventory where you flood the market to a degree that naturally lowers all home values in the process because of how much inventory there is. But the clarity there says to me, it's a line we're not willing to cross to see people's home values go down, which gives me, the belief that, and this is often with politics, but that the current decisions being made around housing are being made in a short-term window. Whether that be 200 billion mortgage-backed securities, whether that be banning of institutional investors, there can be some long-term effects, obviously, on that. But this isn't a long-term plan to really bring affordability into the picture, because it means that you would have home prices go down over time to get there. So I've said, the most practical, fastest path is a lower rate. It looks like that's going to be the focus. It's a short-term, obviously, fix, and a focus here in a midterm election seems to be all short-term. We got HUD Secretary Scott Turner, who comments on housing shortly after these comments. Let's go to that.
Sir, home sales in December, they rose sharply to their strongest pace in 3 years. A lot of people, when we first came in particular young people, were concerned and asking the question whether they would ever be able to afford to buy a house in America, which is the American dream. The 30-year fixed mortgage rate dipped to a multi-year lows, driving monthly payments down for the 2 years at the lowest levels. So more people can get a mortgage now, more families can be able to afford to get a home and achieve the American dream. At HUD last year, we helped the support of over 1 million people through FHA and Ginnie Mae to be able to buy a home. 500,000 of those were first-time home buyers, and hundreds of thousands of our veterans we supported. And so that's good news that millions of people in our country are now beginning to buy homes. We also, sir, saw that you are, and we're working with you, making bold action to ban institutional investors from buying single-family homes. Those homes are for the American people. So, sir, thank you for your leadership on that. Also working with Director Pulte over at FHFA to buy $200 billion worth of mortgage-backed securities, driving down even more the cost to get a home. And so we're grateful for those actions. Also, the One Big Beautiful Bill has been tremendous.
Okay. So mention the big, it sounds like a big number on the face, obviously. 500,000. HUD was able to support over 1 million people through FHA, and Ginnie Mae be able to buy a home. Obviously, those government-backed loans. 500,000 were first-time home buyers. Now, first-time home buyers are down. The average age is moving up. So, that's a context within that stat. That being said, first-time home buyers aren't extinct. They're not dinosaurs. There are first-time home buyers out there. It's much harder today, obviously, with the devaluing of the dollar, assets becoming much more valuable. The government devalued the dollar. Nobody obviously, chose, except for Congress on both sides, to make that decision. We printed all of this money. Inflation happens one way: the government prints too much money. And that's where we're at right now. And when the government misuses money that they print, when they waste it, essentially, when it gets into the hands of people who don't deserve your debt, asset prices go through the roof. And so then asset holders obviously win. And it becomes increasingly difficult to obtain those assets. So I think when I look at Trump's comments and now Turner's comments, to me, there's no signal that outside of the markets where you've seen high levels of inventory and migration has slowed down: Southwest Florida, Austin, Texas. Outside of those particular locations, you're not going to see massive price drops in homes. And if you go back 80 plus years, you only have 4 years where nationally nominal home prices went down more than 1%. That was during a GFC. So history tells us right now what they're saying, policy making wise, tells us there's not going to be huge dramatic dips. And if you do want this massive increase in obviously affordability, but through inventory in your market, then you'll experience what Austin has. You will experience what Southwest Florida has: double-digit declines in the value of the home that you own. Now, so I think there's probably out of the camp of folks who really drive the affordability signal, who love to virtue that signal of affordability. Out of that camp, there's probably two camps within it. Probably a majority who doesn't want their home to go down while they want a virtue signal. And then a very small minority who's like, whatever it takes. My house can go down 30% if it means things are more affordable. Owning a home is a difficult task of the home ownership itself. Maintaining a home, investing in the home, putting in 1 to 3% of the property's value in maintenance costs just to maintain the home. Those are not improvements. Understanding what an improvement is versus a maintenance cost. Keeping things well kept, making the right improvements. If you're going to do an improvement, is it the right improvement for marketability? Does it matter if it's marketability? Are you selling within the first, the next 10 years? It's going to be outdated in 10 years if you stay beyond that point. What would change in your life in order for you to have to sell it? Are you in a position to have equity cushions if you do have to sell it? All of these questions are something that somebody has to consider as a homeowner. And then getting into the position of being a homeowner is a difficult task in and of itself. Are you constructing good offers? Is your ability to negotiate with your agent sound? Are you willing to, if it's your first home, are you willing to live in something a little bit less than what mommy and daddy have built up over their 40 years or 50 years of life, and you've been living in, a comfort zone? Are you willing to take a step back? Do you want to live an Instagram snapshot life in your home? Or are you willing to grind it out and do some sweat equity? I know my first home was one of the most, listen, I wouldn't let one of my daughters walk into the first home that I lived in today. It was a disgusting mess. The place should be burned to the ground today. It still hasn't even, we brought it up on Knowledge Brokers. It still looks like it did back then. And it's not even worth anything. So, but I was willing to take that, step. Getting into home ownership, it was the worst home I ever lived in, probably since I was, since I was like below 10 or something like that. And I don't remember that. So it's hard to own a home, and it shouldn't be just very easy. We got ourselves into trouble when it was very easy. All right, to finish up this cabinet um, thoughts, let's go to the last clip here that I wanted to play, and this is the end of the housing discussion here as it relates to the cabinet meeting.
Again, existing housing, people that own their homes, we're going to keep them wealthy. We're going to keep those prices
So again,
up.
doubling down on
We're
that.
not going to destroy the value of their homes so that somebody that didn't work very hard can buy a home. We're going to make it easier to buy. We're going to get interest rates down. But I want to protect the people that for the first time in their lives feel good about themselves. They feel like that they're wealthy people. And I want them to understand it. There's so much talk about, we're going to drive housing prices down. I don't want to drive housing prices down. I want to drive housing prices up.
Okay,
people that own their homes.
So there you have it. And so what this tells me is, do not bank on the federal government taking substantial steps towards long-term planning of true housing affordability. This administration is showing you, hey, we're going to let the free market decide kind of what these homes are worth. We're not going to drive homes down. How could a federal government even drive homes down? They would have to make such policy in such a way that rapidly increases inventory. Rapidly increasing inventory is removing all the red tape so people can build like crazy, giving away maybe federal land to allow this building to take place. And what they're saying here is, and you're not hearing that in a lot of the plans, you're hearing $200 billion mortgage-backed securities, you're hearing ban institutional buyers. I think that one's very popular, obviously. You're hearing things like, getting rates down. You're hearing things like that. You're not hearing about long-term plans that dramatically increase inventory at the hands of the federal government, which if you dump a bunch of inventory into any marketplace, it will put downward pressure on price. But they don't want to do that because current homeowners have too much of their wealth tied up into their home. They will not do that. And so do not plan on seeing a long-term plan that overwhelms inventory from the hands of the now you're going to have pockets, Southwest Florida, Austin, that have done very well increasing inventory, have made it easy for inventory to increase. Of course, those are still going to continue over the next 5+ years to be inbound migration hotbeds, which could soak up some of that inventory. But they do not want to kill home prices while making it easier to buy a home. So expect home ownership, as it has been for decades, to bounce between, 63 and 67%. Okay. All right. Employment, got to have a job to have a home. And we want a strong job economy to obviously have a Fed who sees, who doesn't have to go crazy here and just start slashing to slash, but a Fed who can take a stable approach, get rates back down to neutral. That would be 2 more cuts. If the job market does get weaker, they're going to be forced to make quick decisions, of course. And so we look at the job market, and we've got a new ADP employment report out. Okay, so ADP national employment increased by 22,000 jobs in January. Annual pay was up 4.5%. You need annual pay to continue to increase if you want to see what we've seen over the last 7 months, affordability, the gap get closed on that. It takes time. Wages need to increase. Rates need to come down. Those two things need to continue to work in unison, and you need to chip away at it month over month. The only fast cure you would have is some type of global meltdown, not good for anybody, where they dramatically lower rates, or some other kind of financial engineering for the government. And we've seen how that's worked out in the past. It usually leads to inflation. So 22,000 jobs from the private sector in January, according to this ADP. Job creation took a step back in 2025. Private job employers added short of 400,000 jobs, down from 771,000 in 24. Remember, 2025 was one of the lowest levels of job creation in recent memory. So while we've seen a continuous and dramatic slowdown in job creation for the past 3 years, wage growth has remained stable. So those getting jobs, wage growth continues to happen for them, which is a positive in obviously, again, the fight against this inflation. Okay, so let's break this down further. You look at private employment, it looks much like home prices of years past, up and to the right. Obviously, the one time period when that wasn't the case was during the COVID shutdown era, but continuing to move up U.S. private employment. Here's the January numbers by establishment. So small companies, mid-sized companies both moved up, net positive. Large companies moved down, 500 plus employees. And 200, kind of those mid-tier, 250 to 499 had to move up to 20 to 49. The small category moved down, kind of wiping out the 1 to 19 employee level. Here it is by industry. Construction was up, manufacturing down, trade, transportation, utilities up, information down, financial activities up, professional and business services down 57,000. Maybe one of those, you look at those industries and you're seeing a lot of AI opportunities there. Education and health way up 74,000, and leisure hospitality up just a tick. So there's your ADP employment report here. And what do we got? We got mortgage applications, Haley? All right. Haley says yes. We've got them in. We'll look at this every single week. We've seen tremendous growth on mortgage applications, giving us a leading indicator that the future is bright. The headline on mortgage applications, not so bright, decreased 8.9% from a week earlier. So we lost the momentum on rates, kind of ticked back up from the low 6 level that we hit back up to 6.2-ish. And loan application volume on the whole decreased 8.9%. Okay. So application volume down, led by 14% drop in purchase applications. Okay. So the one we really care about, that purchase index, did decrease from 14% a week earlier. Now it was 4% higher than the same week a year ago. So continuing to see throughout the month of January, when you compare the same week to the same week last year, mortgage applications on purchases have moved up. So every week in January, now we were seeing double-digit growth, 10% or more growth on that. And this is only 4%, but every week of the year has been better than last year at this time. Now, we're still coming off of historically low numbers, but we are trending in a better direction. And when you map that out 30 to 90 days forward, this should lead to more existing home sales. Scott Turner said, and he mentioned that December stat is cherry picking a little bit because on the whole, existing home sales were way down, but he looked at December, it was very strong, one of the stronger, months reports that we had over the last 3 years, certainly the case. But these are signs that we could start to see now a trend in improvements on existing home sales and start to, pick ourselves up off of this basement number, this low floor of 4 million or so existing home sales. 10-year treasury comes in to start today at 4.276. This is on the high side of the last week, on the high side of the last 30 days, and of the high side of the last 90 days. 30-year fixed rate yesterday ticked up. 6.2 was the reading, second reading of the week, off of a 6.17 to start the week, according to Mortgage News Daily. Okay. Gearing up now, about 2 hours, less than 2 hours away from kickoff, BAM Pro Bowl. It's our first mega virtual event of 2026. BAM Pro Bowl number 3, third time we've done the BAM Pro Bowl. If you haven't secured your spot, go to bamprobowl.com. All the action happens live. You don't want to miss it. Noon Eastern time, 9 a.m. Pacific time today. All happening. bamprobowl.com. Secure your spot. I will see you there at kickoff in less than 2 hours. Looking forward to it. Until then, toodaloo.